So when you're purchasing insurance, you want to give as much coverage or as thorough coverage as you possibly can, or full coverage, rather than having some sort of a co-insurance clause where you have to pay for part of a loss. That could become quite sizable. But the point again being is that if we're looking at the claim settlement method, it would be like, for example, the actual cash value. The payment you receive is based on the current replacement cost of the damaged or lost items less any depreciation. The next item that we would be looking at would be replacement value. In this case, you receive the full cost to repair, not the to repair or replace the damaged or lost item. Depreciation is not considered. May limit the replacement cost to 400% of actual cash value of the item. So if you've got an older home and it gets completely destroyed, you want to make sure that you're able to replace that home and put it back to where you had it before, right? So again, the cost typically 10 to 20% more than the actual cash value coverage. Again, it's much more comprehensive, this insurance that you would get for that replacement value. So when we're looking at coverage, you want to make sure that you, starting with the replacement value of the home, for example, understanding the value of the contents of the home. If you've got expensive furniture, so on and so forth, things that you want to make sure that you have adequate coverage for that. Liability coverage, that's where that umbrella policy would come into play, the $1 million policy, and protection against, for specific items such as jewelry. This was that add-on insurance, if you will, that we talked about before. For expensive items, specific expensive items where you keep inventory of exactly what these items are, okay, for that additional rider, that insurance policy that you would be to get that additional coverage. So factors affecting that home insurance cost: the location of the home, type of structure. A brick house, for example, costs less to insure than a wooden house, the frame house. Coverage amount and policy type, the deductibles that would be at play. Common deductibles are $500 or $1,000 deductible, meaning again, the higher the deductible, the lower the cost of that insurance. Reducing home insurance costs, such as with home insurance discounts, where you bundle with your auto, home, etc. Where you bundle insurance together, where you install smoke alarms and fire extinguishers, and again, the bundling that I just referenced before. Differences between companies, and making sure that you've got some the good companies out there. You can look again this up through like such things as Consumer Reports, where you compare the cost, coverage, and services associated with the company, and consider how claims are settled. If there are complaints out there, really is what we're coming down to. How quickly it is for you to be able to have your how satisfied you would be if, in the event that you'd have to claim a loss in your that has to be paid for through insurance, or should be paid for through insurance. So again, moving on to motor vehicles. Now, motor vehicle bodily injury coverage, this is that liability piece that we're talking about. Covers the risk of financial loss due to legal expenses, medical expenses, lost wages, all the other things that could come along, that harms the people that are involved. Medical payments coverages, and if you're injured while you're in another person's automobile or struck by an automobile. Uninsured motorist protection covers the cost of injuries to you and your family if your vehicle is hit by a person without insurance. However, it does not cover property damage. No fault insurance in a state like Michigan system is intended to provide fast, smooth method of paying for damages without taking legal action, against the other insured party, if you will. The drivers collect from their own insurance companies, and the insurance companies, through subrogation, are able to go and go after each other then. So moving from liability to property damage liability, physical liability to property damage liability covers the damage to other person's car when you're at fault. It also includes damage to such things as street signs and buildings. If there are some other items that are involved. So also the next item would be for collision. When your car is in an accident, collision coverage pays for the damage to your automobile regardless of who's at fault. So if you have collision, it pays for that. If you're not at fault, your insurer will try and collect from the other driver's property damage liability first. This is again subrogation. So coverage is limited to the actual cash value of your vehicle from an appraisal service. So again, this is something where it would be Kelley Blue Book, for example, or in this case, we're talking about something through the NADA. So comprehensive physical damage covers the damage to your vehicle that is not caused by a collision, such as fire, theft, vandalism, glass breakage, hail, so on and so forth. Just sitting out there and the being hit by something or some damage done to the vehicle that's natural causes in most cases that we're talking about. Some things within the car are not covered. It all depends, right? So breaking down the coverages on your vehicle, first would be the deductible. If you have a broken windshield, it may cost $250 to replace. If you have a $100 deductible, then your insurance company would pay $150, and you get to pay $100 of it to cover the damages. Other automobile insurance coverages would be the wage loss insurance, reimbursement for any salary or income lost due to injury in an automobile accident, towing and emergency road service, and also pays for the cost of breakdowns and mechanical assistance. Oftentimes there are lots of different insurance coverages that are out there, and again, this is why it makes sense to. It's important for you to kind of read through all of the fine print on the coverages that you get with your insurance. So when we're talking about liability, again, we're looking at it in terms of the bodily injury, and then the second, the property damage, the liability associated with that. This is the typical breakout is 100, 350, meaning $100,000, $300,000, and $50,000. So $100,000 paid to one individual person in an accident if there's some, the personal bodily injury, the personal liability. 300,000 for all the parties that are involved in the accident, and then the 50 piece of it is the 50,000 limited for payment of damage to the property of others. This is where, when you see these numbers, they made sense a few years ago, but for example, it's oftentimes when we talk about payment for damage to property of others, vehicles are oftentimes far more than $50,000, some $100,000 plus vehicles out there. So it might be in your best interest to get more insurance than this 100, 350, maybe double that, 200, 600, 100, whatever the possibilities are that are out there. But again, most states have compulsory insurance laws where you have to actually have to have at least this minimal coverage. So again, it falls into two categories: bodily injury coverage and property damage coverage. So again, when we're talking about the bodily injury, if you will, the typical or the basic coverage would be that 100,000 and 300,000, but you can also get that additional $1 million or more through an umbrella limited liability policy, and that's typically not terribly expensive. It's more, but it's incrementally so. It's usually not double the cost of your insurance. It may be another $50 or $100. I'm not sure, but there's additional cost, but it's not much higher for a great deal more coverage. So again, amount of coverage, legal concerns. Every state has their laws requiring and encouraging liability insurance coverage to some extent. Most can't afford to pay an expensive court settlement with personal assets, so drivers buy automobile liability insurance. This is what we do. Property values, again, the cost of vehicles has gone up from $50,000 up to $100,000 or even more. So the cost of insurance are going up because of inflation and other reasons. But again, it's something that we are all encountering when we see our insurance bills for our automobile coverage, right? Our automobile insurance. So what factors into the cost of that automobile coverage? The auto type, the year, make, and model, the theft rate, the rating territory, what your zip code is. Unfortunately, that plays a major part of it. Different costs due to the number of claims made in the area where you live. Driver classification, if you are a male, female, if you're under the age of 25, if you're over the age of 70, all the different things that come into it. And along with that would be your credit history. Again, credit history has a major role to play in this. You wouldn't think so, whether or not you're a safe driver, but it's that responsible part that kind of comes through, and it's just a shorthand way for insurers to kind of look at your credit history and see if you're a risk, a good, reasonable risk. So reducing the insurance premiums by, comparing companies, their net quote, for example, is an example here. Premium discounts, by bundling things that we had talked about before, insuring 2 or more vehicles with the same company, increasing your deductible. So rather than being $100 deductible, make it a $250 or $500 deductible, and try to keep safe on the roads, to avoid accidents as much as you possibly can. And the accidents happen, but nonetheless, do your darndest to prevent them. Installing security devices on a car, such as car alarms, be a non-smoker, and all the other things anything that you can come up with. If you're a good student, you get a student discount. If you're actually a younger driver, there are a variety of little tricks, if you will, that would keep your insurance premiums lower than otherwise would be the case, and they are darn high.